Hello students, in today's video I am going to discuss bad debts and provision for doubtful debts. Bad debts are also known as irrecoverable debt expense. Similarly, provision for doubtful debts is also known as allowances for receivable or allowances for bad debts. So let's start.
First of all, what is a bad debt? A bad debt is a credit customer balance which is definitely gone. So for example, if a credit customer owes us 1000 and that customer has gone bankrupt or liquidated, or that customer has simply ran away and we are unlikely to get money from him, then that is an example of bad debt. In case of bad debt, our receivable is definitely gone. We are not going to get that money. So, what is the double entry to record bad debts? Bad debts or irrecoverable debts are the same thing. These are just different terms. So, in order to record bad debt expense or irrecoverable debt expense, we debit bad debt expense and we credit account receivable. We credit account receivable because money is definitely gone. First of all, we have made a loss and expense. Expense whenever increases, debit. That's why bad debt expense is being debited. And since we are not going to get that money from our credit customer, therefore our account receivable balance is decreasing. If account receivable balance is decreasing, that means our asset is decreasing. If our asset is decreasing, we do credit. So account receivable will be credited. So that was irrecoverable debts or bad debts. Next we have provision for doubtful debts. Provision for doubtful debts are also known as allowances for bad debts or allowances for receivables. So all of these terms, allowances for doubtful debts, allowances for bad debts, allowances for receivable, have the similar meaning. So provision for doubtful debts are those credit customers on which we have some doubt. They may pay us or they may not pay us. I repeat, provision for doubtful debts are those credit customers who may pay us or they may not pay us. So what is the double entry to record provision for doubtful debts? We debit bad debt expense and we credit provision for doubtful debts. What is provision for doubtful debts? What is the nature of this account? What is the nature of provision for doubtful debts? It's a contra asset account. It's a contra asset account. It whenever increases, it will be credited. Whenever it will decrease, it will be debited. So here, provision for doubtful debts is increasing. Therefore, we credit provision for doubtful debts. Okay, at this stage, we can solve some examples. In question number 1, you can see there is a trial balance and we have account receivable balance, irrecoverable debt expense debit balance, and allowances for receivable balance. In adjustments, they have given us record a further bad debt expense or irrecoverable debt expense from a credit customer 700. Okay, so we have already seen the double entry to record a bad debt expense. I'm going to pass that entry. We do bad debt expense debit amount 700 and we credit account receivable. Account receivable, which is also known as debtors or trade receivable. So we will credit account receivable by this amount, 700. So this one is a debit, this one is a credit. I will adjust my trial balance for these numbers. So 700 will be added to already existing recoverable debt expense. And since I'm crediting account receivable, therefore its net balance would become 99,300. Okay, next they are telling us allowances for receivable is to be adjusted to 2% of remaining account receivable. Okay, whenever you have to adjust allowances for receivables, then you have to perform this working. So required allowance is 2% of 99,300. Let's see how much is it. 99,300 times by 2%. And how much is existing allowance? Existing allowance is 500. So the difference, if resultant answer is a positive, that will be an increase in allowance. If resultant answer is a positive, that will be an increase in allowance. If resultant answer here is a negative, then that will be a decrease in allowance. So the double entry to record increase in allowance is debit, credit. We debit bad debt expense and we credit provision for bad debts. Provision for bad debts, allowances for bad debts, or provision for doubtful debts, whatever term you can use it. So this one, I will pick number from here, 1486, 1486. So I'm going to adjust my trial balance with these numbers. So first of all, allowances for receivable. Allowances for receivable or provision for doubtful debts is the same thing. I'm just going to put here allowances for receivable. So I'm going to take 1486 credit and I will debit this one plus 1486. So I have adjusted my trial balance for the two adjustments. One adjustment was to record bad debt expense. Second adjustment was to record actual allowances for receivable adjustment. Now question is, how do we present these numbers in income statement? Irrecoverable debt expense or bad debt expense will straight away go to income statement. In statement of financial position, we will take gross balance of account receivable, which is 99,300, and we will deduct allowances for receivable out of it. 99,300 minus 1986, that will give us account receivable net balance of 97,314. This is how we are going to deal with bad debt expense adjustment and allowances for receivables adjustment. So let's continue with more practice. I got question number 2. Once again, I have a trial balance with list of balances and I need to make adjustments. So first adjustment is for irrecoverable debt expense 1500. I'm going to record a bad debt expense. So entry is bad debt expense debit 1500, account receivable, trade receivable or debtors credit 1500. I'm going to copy these initial numbers and then I will adjust them for adjustments. So since account receivable is 1500 credit, it will decrease its balance. Bad debt expense is debited by 1500, so I will take plus 1500. We are done with first adjustment. For second adjustment, we will take allowances for receivable, 5% of remaining account receivable. So I will take here 5%. How much is our remaining trade receivable? They are 73,500. So 73,500 times 5%. That gives us 3675. Next question is, how much are allowances? Allowances are 2000. So we will simply take them here. 3675 minus 2000 gives us a positive number of 1675. So double entry is 1675, 1675. Bad debt expense debit, allowances for receivables credit 1675. So here I will adjust again irrecoverable debt expense 1675 plus 1675. Okay. Plus 1675. Okay, now how do we present it in the income statement? In income statement or profit or loss account, it's just a coincidence that irrecoverable debt expense and allowances for receivable, their balance is same, but it's just a coincidence. So in income statement, I will take bad debt expense or irrecoverable debt expense 3675. In statement of financial position, I will take account receivable gross balance, which is 73,500, and I'm going to deduct allowances for receivables out of it 3675. So account receivable net balance of 6985 will be presented on the face of statement of financial position. That's it. Question number 2 is complete. Next, we have another possibility. If we receive cash from a credit customer whose debt we previously written off. So this is the double entry for a debt that has been recovered that has been previously written off. So we receive money in the bank. So bank increases. Bank is an asset, increases debit, and we will credit bad debt expense. So please remember this double entry. When we receive cash from a credit customer previously written off, we debit bank, credit bad debt expense. Let's continue to two more examples. After solving these examples, your concepts relating to bad debt expense and allowances for doubtful debts will be very clear. Okay, so here we have a question. Once again, trial balance is given with list of balances. We have to record irrecoverable debt expense for a credit customer 150. So I'm going to pass this double entry here. 150 bad debt expense debit, 150 account receivable or debtors credit. So that was first adjustment. Second adjustment, last year written off bad debt expense recovered 50. I need to make some space for the second entry. Let me make some space. Okay, so I will debit bank amount 50 and I will credit bad debts expense. So I have to incorporate this entry in trial balance as well. So I will just create one more account, bank debit 50 and bad debt expense credit 50. So I'm going to deduct, oh sorry, I did not adjust it my trial balance for first entry. Okay, so first adjustment was for 150 bad debt expense debit. I will add here 150 and account receivable will be credited, so its balance will decrease by 150. Next we have this second adjustment where bad debt expense is being credited by 50. So once again I will reduce its balance. Sorry, this is the only time we are reducing its balance by 50. Now the third adjustment, we have to adjust allowances for receivable for 1% of remaining account receivable balance. So remaining account receivable balance is this. Right. Remaining account receivable balance is 4980 and I have to take 1% of that according to information given in adjustment. So my required allowance is 1% of 49850. How much is my existing allowance? My existing allowance is 1500. So that means there is a decrease in allowance this time. Since it's a negative figure, that means it's a decrease in account. If there is a decrease in allowance, then this adjustment will be reversed. Now bad debt expense will be credited and allowances for receivable will be debited. So entry is reversed. 1001.5, 1001.5. I'm going to adjust my trial balance for this adjustment. Since it's credit, therefore I will use negative figure 1001.5. So resultant balance of irrecoverable debt expense or bad debt expense is 98.5. Then we have allowances for receivable. So for allowances for receivable, I'm going to deduct 1001.5 because it is being debited. So allowances for receivable are 498.5. Now in income statement, we will take irrecoverable debt expense, which is 98.5. In current assets, account receivable gross, I will take 49850 and I will take allowances for receivable 498.5. So this is my account receivable net balance of 49,352. This question is complete. Now I'm going to solve final question for today's lesson. So once again, I have list of balances available. I'm going to deal with adjustments. So there is a bad debt expense 3,000 from a credit customer. So I will pass entry bad debt expense debit 3,000, credit account receivable 3,000. I'm going to adjust this trial balance with that. So plus 3,000 here. In second adjustment, last year return of bad debt recovered 5,000. So what I'm going to do, 5,000 debit, 5,000 credit. I will debit bank, I will credit bad debts expense. So once again, I'm going to adjust my excuse me, I'm going to adjust my irrecoverable debt expense or bad debt expense balance minus 5,000. So you can see the balance has gone in negative. We don't write negative balance, we will write 1900 credit balance. And bank debit, okay, I will create bank account. So bank account 5,000. Last adjustment, allowances for receivables. Oh, I forgot to adjust account receivable balance for the first adjustment. I'm gonna take this minus 3,000. So that's 97,000. Okay, so now they are saying take 4%. So I will write 4% here and I will copy balance of account receivable from here. So 97,000 times by 4%, that gives me 3880. Existing allowance are 2,500. So you can see resultant figure is an increase in allowances 1380. I'm going to pass entry 1380 debit 1380 allowances for receivable credit. I think I made this mistake. It's not 3,000 there. 3,000 was to be adjusted in account receivable. So this balance is already standing at 2,500. I will add 1380 to it. And then in bad debt expense, since it's a debit balance, 1380 will be deducted. So final balance of irrecoverable debt expense is 520. So in the income statement, I will take bad debt expense, but it will be taken as other income because it's a negative balance. It will be taken as other income. It will be taken as other income because it's negative balance. So it will increase profit in the income statement. In statement of financial position, I'm going to take gross balance of account receivable, which is 97,000. Allowances for receivables are 3880. So account receivable net balance of 93,120 will be reported on the face of statement of financial position. So that's pretty much the concept of bad debts and allowances for receivables. If you like my video, please like, subscribe and share. And if uh, you want me to make videos on other accounting and finance topics, then please let me know in comments and I will try to make those videos as well. Please comment and let me know how did you like my effort. Thank you.